Good afternoon. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago on February 3rd, bringing you some commentary here in the energy markets. So let's get started. Right now we've got crude prices quite a bit weaker. We're off about 86 cents. The March contract trading around 96.63. We've got the Brent touch weaker as well, off about 25 cents around 106.15. So really starting to see that spread kind of narrow. Nat gas pulling back off of its highs. A lot of volatility we've seen in that market. You want to talk about some ideas and strategies there, give me a call. Nat gas is currently off. But just to the tune of about 6 cents right now. We're trading around 493.70. So, last week we saw, that market hitting upwards of almost a 550 area. We've really seen some pullback there, but I've got some ideas for playing the volatility in there. Complex a bit weaker as well. Take a look at what's going on here today. S&P has been weaker pretty much all morning. And is continuing to see a sell-off here into the afternoon. We're off about 33 points. So that's a pretty good size pullback. And if you take a look at the move we've seen there so far, back at the beginning of this year here, so we're now into the first week of February, so really only over a span of about 5 weeks, we've seen the S&P pull back now about 90 points off its high. And, that's something I've talked about before, for traders that have been, long equities, give me a call here. Although I focus a lot on the energy markets, I do have some ideas on how you can, protect yourself in the equities markets. This could still be the beginning of a major move down. Although S&P's off about 90 points, really, we're seeing some technical breakdown here. Data coming out of China is showing that their manufacturing data is their manufacturing slowing down here quite a bit. Weakest we've seen now in about 6 months. So, this is all kind of translating and working together here. Seeing the weaker economic data, S&P pulling back here a little bit. Traders start to get a little bit nervous. You can start to see the demand for oil slip a lot. And not to mention that we've talked so much about it in these posts here. In my opinion, we've got ample amount of crude oil out there. You take a look at the stockpiles here. We're running about, over 90 million barrels more than our lowest amount of oil for this time of year. Last week we saw a pretty big build in oil. We'll see what this week's is going to hold here. But it wouldn't surprise me at all to see another build. So stay tuned for Wednesday's report. We'll get into more detail there as they release the EIA data. One thing I want to talk about too is on the technical side of things here. Look at today's price action on March crude oil. Trading right in between the 200-day and the 50-day moving average. Today's high was around 97.94, which is right up there around the 200-day moving average, and today's low 96.26, which is right down there around the 50-day moving average. We've seen now here for the last couple of sessions consecutive lower highs and lower lows. So, my opinion of it is this here. I think oil prices are still going to move lower. I've got some ideas and strategies on how you can play that. Also, certainly shoot me an email or give me a call if you'd like to get your hands on our 20-page 2014 market outlook in crude oil. It's packed with a lot of historical information and certainly gives you obviously an outlook of what we think or where prices could possibly be heading for this year. In addition, if you're interested, we have this 2014 pocket futures calendar and reference guide. This is great to have, tuck in your briefcase when you're on the go. You need to check out, when important reports are coming out or expiration dates, first notice dates, last trading days, etc. So it's a great little guide to have. Shoot me an email with your mailing address. I'll mail this out to you so you can have that as well. And of course, keep in mind that futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.